Is Bitcoin poised to head back up to $20,000? Is it time to mortgage the house and cars and dump our whole life savings into Bitcoin? Stick around and we'll talk about it. Hi, this is Tim with Trading Strategy Guides. Is Bitcoin poised to head back up to $20,000? Who knows? No one knows for sure. Lots of people will tell you that it's going up or down or something, and they all have a plan to make their fortune in Bitcoin or to sell you a plan to make your fortune in Bitcoin. But truthfully, no one knows. No one knows what it's going to do tomorrow, next week, next month, next year, and that applies to any trading instrument, whether it's Forex or stocks or futures or what have you. So, are you going to dump your whole life savings into Bitcoin? Of course not. You're not stupid, right? You have no idea where this is going, so you never ever bet the farm on any trade. Always remember there are no guarantees when trading. There are no guarantees in life, right? A percentage of your trades are going to lose. That's part of the job. You will never know in advance which ones are going to lose. Of course, if you did, you wouldn't enter them, right? How you handle losses, and wins for that matter, will determine your success as a trader. With all that said, let's take a look at Bitcoin and see what we can do with it. This is a TradingView daily chart of Bitcoin against the US dollar. As you can see, it's been in an ever-tightening consolidation since November. Kind of started right in here, and it's just been getting tighter and tighter and smaller as time goes along. Typically, a consolidation like this will break in the same direction as the trend that came into the consolidation. So this downtrend, as it entered the consolidation, so often we'll see it break to the downside. But you can never get biased when you're trading using technical analysis. You have to trade what you see, not what you think. So be prepared to go either direction. This is what I suggest that you do on this situation. First of all, you will only want to take this trade if you get a close outside of this consolidation. Okay? In other words, a closed daily candle outside of this consolidation. You will want to make sure that that closed daily candle is supported by sufficient volume. This is not sufficient volume right here. This is a volume average, 40-period volume average right here. So it needs to be close to that or above it, preferably above it. Otherwise, just let the trade go. Don't get what we call FOMO syndrome, the fear of missing out. We win by winning, but we also win by not losing. You could miss a good move by passing up a trade, but that's just part of the job. Okay? Sometimes you will pass up a trade because not everything is right, and it would have been a winning trade. You can't worry about that. You have to move on. Okay, so if you get a break of this consolidation and it has good volume support, then you want to take a trade in the direction of the break. So if it breaks below here, you will go short. Set your stop loss to 1.5 times the ATR. It's the ATR right now. That ATR may be different, when it breaks out, but right now the average true range for 14 periods is 123.17. So your stop loss is going to be 184.76. That's 1.5 times this 123.17. Now remember, this could be different when this actually breaks out. In fact, it most likely will be different because these are some pretty tiny candles right here. But on the breakout, on the candle, use 1.5 times the ATR for your stop loss. Set your first target at 1 times the ATR. So your first target in this case would be 123.17. When the price hits the target, take half of your trade off and let the other half run. So you may want to enter 2 positions so you can set a take profit and stop loss on 1 position. Follow the stops on the second half to maximize your profit. Risk no more than 2% of your account on the trade. Remember, no trade is 100% sure. No trade's even, 80% sure. There are no guarantees, so control your risk on every single trade. Here are your trade rules. Again, wait for the daily candle to close outside of the consolidation. Be sure the close includes decent volume, otherwise pass. There will always be another trade. Trade in the direction of the break. Set your stop loss to 1.5 times the ATR. Set your first take profit to 1 times the ATR. Close half your trade at the first profit. Follow stops on the second half to maximize your profit. Remember, you're always told to cut your losses off and let your profits run. It's the reason why I don't like setting a take profit for the whole trade, because if you set a take profit for the whole trade, then you're capping your profits. And what if you cap your profits at, say, 50 pips, or in this case, $123, and the trade runs $500? Okay, you've left an awful lot of money on the table. You don't want to do that. Risk no more than 2% of your account on this trade. Do not ever risk more than 2 or 3% of your account. And I say 2% or less is even better. Okay? Feel free to comment below. I'll try to respond within 48 hours. Thanks a lot for watching. I'll be trying to do this at least a couple of videos a week covering various trading topics, so check back often. If you want to see more of these videos, click the subscribe button below and hit the bell to be sure you're notified when they come out. You guys have a great week.